$44.8 billion for a spice rack. I actually love this Unilever McCormick deal. The synergies are obvious.
Obvious? Nate, 29 billion of that is McCormick stock. They are massively overpaying for garlic powder.
Garlic powder is recession-proof? Come on. But if you hate that valuation, wait until we talk about Nvidia dropping $2 billion on Marvel.
Pure AI FOMO. I've got the footnotes on that one ready. But fine, let's start in the grocery aisle. Who is actually swallowing who here? The rundown.
$13.4 billion in healthcare M&A before I even finished my first coffee.
Eli Lilly dropping $7.8 billion on Centessa is one thing, but Biogen paying $5.6 billion for Apellis feels a little desperate. Have you actually looked at the premium?
I think Biogen is just terrified of missing the boat. Financing conditions are improving, and that's basically pouring gasoline on these pharma shopping sprees.
Oh, come on. Financing conditions are fine, but they're overpaying to mask pipeline anxiety. It's classic panic buying.
Speaking of panic, how about Nvidia quietly taking a $2 billion stake in Marvel Technology?
Quietly is doing a lot of heavy lifting there. They buried the disclosure, but everyone saw it.
It makes total sense, though. You control the AI chips, you might as well start owning the networking layer too. It's monopoly by 1,000 paper cuts.
Except regulators are going to have a field day. Watch the market fall out tomorrow. Geopolitical volatility and cross-border tech deals are a toxic mix right now. I bet we see an antitrust probe by Friday.
I'll take that bet. Meanwhile, Legrand is aggressively rolling up data center infrastructure, buying Keydak in China, TES in Europe. They're selling the picks and shovels for the AI gold rush.
Actually, they're selling the server racks and power strips. But sure, keep using your banker analogies.
Hey, racks are the new real estate. Speaking of assets, Brookfield Wealth Solutions just closed their £2.4 billion buyout of Just Group. They basically own the UK pension risk market now.
Which is incredibly boring but wildly profitable. Just like the rumor about GFL Environmental.
Oh, the hush-hush Texas waste operator talks?
Exactly. Firms taking public trash companies private is peak 2026 energy. You get predictable cash flows and literal garbage.
Better than the Unity Group rumor? TPG and T-Mobile circling a telecom asset? Sounds like a massive headache.
I prefer my headaches to come from consumer goods.
Which brings us to the $44.8 billion elephant in the room. Or should I say the $45 billion spice rack?
Unilever and McCormick. $15.7 billion in cash, $29.1 billion in stock.
I'm still trying to wrap my head around a mayonnaise company buying a black pepper company for that much money.
The footnotes on the projected synergies are wild. We need to break down exactly how they plan to pull this off. The big one.
$44.8 billion for a spice rack and some mayonnaise. You have to respect the sheer audacity of this Unilever and McCormick deal.
Audacity is certainly one word for it. Reckless endangerment of McCormick's balance sheet is another. I am still staring at the cash portion of this structure.
Oh, come on. It is a brilliant portfolio play. Unilever gets to finally shed its slow-growth food division to focus on beauty and personal care, and McCormick basically doubles its global footprint overnight.
Nate, they are handing over $15.7 billion in cash, plus $29.1 billion in McCormick stock. That is massive dilution for McCormick shareholders just to acquire Knorr bouillon cubes and Hellmann's.
You are ignoring the synergies. Think about the distribution channels. Unilever has deep penetration in emerging markets where McCormick has been trying to get a foothold for a decade. You plug Old Bay into Unilever's global supply chain, and suddenly you are selling crab seasoning in Jakarta.
Old Bay in Jakarta. Right. Because that is the missing piece of the global culinary puzzle. Look, I read the footnotes on the financing this morning. The debt load McCormick is taking on to fund that $15.7 billion cash portion is staggering. The financing costs alone are going to eat whatever operational synergies they are pitching to the street.
See, that is the classic analyst trap. You're getting bogged down in the immediate debt to EBITDA ratio and missing the 5-year horizon. Strategic consolidation is the only way to survive the margins in consumer packaged goods right now. If McCormick didn't buy this, private equity would have swooped in to carve it up.
I highly doubt a PE firm would swallow a $45 billion food conglomerate in this environment. Not with the geopolitical volatility and cross-border regulatory headaches strategists are flagging right now. Unilever is European, McCormick is American. Integrating these supply chains is going to be a nightmare.
Which is exactly why you buy scale. You hedge your supply chain risks across multiple geographies.
You don't hedge supply chain risk by bolting two massive clunky bureaucracies together and praying for efficiency. I genuinely laughed out loud when I saw the press release. I thought the $29.1 billion in stock was a typo. McCormick's float is going to look like a confetti parade.
I just want to know if this means we are getting Old Bay flavored Ben & Jerry's.
Unilever is already spinning off their ice cream division, so tragically, your spicy cherry Garcia dreams are dead.
My banker brain loves the deal structure, but my stomach is definitely grieving.
Well, your banker brain is going to need to defend the math when the first combined earnings report drops. And speaking of complex math, we need to talk about what is happening across the pond. Brookfield Wealth Solutions just dropped £2.4 billion to buy Just Group.
Ah yes, the great British pension grab. I love a good risk transfer play. Voices? I was reading this analyst note this morning claiming improved financing conditions are the primary catalyst behind the surge in tech megadeals.
Oh, please. Financing conditions?
Hear me out. They are saying the debt markets are finally wide open again.
Debt markets have absolutely nothing to do with Nvidia dropping $2 billion on a Marvel Technology stake. That is pure balance sheet muscle. Nvidia is just walking around the semiconductor casino dropping chips on whatever AI roulette number looks good.
Okay, sure. Nvidia plays by its own rules, but the broader tech space is waking up. The analysts are also flagging this massive wave of private equity, taking public companies private to drive efficiency.
I read that exact same note. A robust M&A environment, they called it. I actually laughed out loud at my desk.
Why? It is robust.
It is robust for strategics. It is an absolute slog for PE firms trying to scrape together syndicated loans. The only reason they are taking companies private is because public valuations took a hit, not because financing is magically cheap. Plus, strategists are literally flagging cross-border challenges and geopolitical volatility as huge risks to execution right now.
I have to push back there. Look at Legrand. They are aggressively expanding their data center footprint and just scooped up Keydak in China and TES in Europe. That is cross-border tech M&A happening right this second.
Server racks.
What?
They bought server racks. I just think it is funny. Legrand is buying server racks in China, and Unilever is buying spice racks in America.
Wow, you really waited all morning to deploy that joke, didn't you?
I did. $45 billion for the McCormick spice rack. You have to respect the pivot.
Well, speaking of things heating up, we should probably talk about the telecom gossip that is absolutely melting down my inbox right now. Spill the tea. I am telling you, the Unity Group chatter is getting deafening. TPG and T-Mobile are absolutely circling those assets.
Circling is a generous word, Nate. The stock is surging on whispers, but look at the actual infrastructure footprint. T-Mobile doesn't need all of it.
You don't buy the T-Mobile angle? They need the fiber.
I buy that TPG wants to take them private. Private equity loves a messy public telecom play right now because financing conditions actually look sane again. But T-Mobile, they are digesting so much already.
Oh, come on. T-Mobile is like a great white shark. If they stop swimming and eating smaller telecom assets, they die. Plus, the private equity guys need a strategic buyer lined up before they even write the check.
Lining up a buyer for a deal that hasn't even happened. You are so far ahead of the rumor mill, you are literally inventing the flower.
I prefer the term visionary. But speaking of things people are trying to keep quiet, did you catch the GFL environmental leak?
The waste management giant.
Yes, late-stage talks to buy a massive Texas waste operator. Supposedly very hush-hush.
I love how Wall Street defines hush-hush. It means exactly 3 analysts know, and they have only told their top 50 premium clients.
Exactly. Garbage deals are always the best deals. You are literally printing cash from trash. The margins are beautiful.
I read the regulatory footnotes for GFL's last 3 regional acquisitions. They are aggressive, but swallowing a major Texas operator means they are going to face some serious antitrust scrutiny. You don't just consolidate Texas trash without someone in Austin throwing a massive fit.
You think the deal gets blocked?
I think the antitrust lawyers are going to make a fortune either way.
As is tradition. But if you want to talk about people making an absolute fortune, we need to talk about what Nvidia just did.
Oh, the Marvel Technology stake. $2 billion just dropped casually in a disclosure filing.
Exactly. Let's look at what that means for the semiconductor market tomorrow. Tomorrow's radar. I'm telling you that Nvidia filing is the one to watch tomorrow. Dropping $2 billion on a Marvel Technology stake is not just casual portfolio management.
Oh, come on. $2 billion is couch change for Jensen right now. You're reading way too much into a minority stake. It's a strategic hedge, not a precursor to a takeover.
A $2 billion hedge? Spoken like a true cynic. I guarantee we see market fallout tomorrow morning across the whole semi-space.
We'll see. I'm actually watching Unity Group. The stock is absolutely flying on these rumors that TPG and T-Mobile are circling.
T-Mobile buying up fiber assets? Now that's a pivot.
Right? And keep an eye on Vection Technologies. They're sweating to hit that April 9th target to close the Digital Experience Labs deal. I want to see if they actually pull it off or if we get a Friday night delay filing.
Spoiler alert, they usually delay. But we'll be right here to read the footnotes when they do. Catch you tomorrow.